Let's bring in Mark Fields, TPG Capital Senior Advisor and former Ford President and CEO. Mark, thanks for being with us today.
Hi, Morgan.
So I want to get your take on the fact that we do see Tesla at all-time highs. It's a market cap that has surpassed all of the other auto manufacturers now. Is this really about delivery expectations, which are in the tens of the thousands versus millions at other auto manufacturers? Or is this more about where the future is headed for mobility when you talk about things like EVs and self-driving technology is something that Tesla right now currently has such a head start on?
Yes, I think it's actually a combination of both, Morgan. I think the first, what the Tesla's being rewarded with is growth. I mean, they grew on a month-over-month basis. And although on a year-over-year basis, they were down about 5%, the rest of the auto industry was down here in the States almost about 25 to 30%. I also think there's a couple other things that investors are looking at. They're looking at competition, and there was an anticipation that the established OEMs would bring products to market, which they are. But you look at somebody like VW, who's having a lot of problems with their ID.3 in terms of the software management, and that's something that Tesla has done very well. They haven't mastered the manufacturing piece of it, but they have mastered the software piece of it, which the established OEMs still need to do. I think also from a CO2 reduction standpoint, even in this depressed economic environment, you're seeing places like China and Europe not backing off CO2 reduction targets, which are important for electrification. And I think finally, investors are saying, listen, there are new products coming forward, whether it's the Cybertruck or the heavy-duty truck. Those are all incremental products. They're not replacing other products in their lineup. And then to your second point, it is around electrification going forward. It is going to be a natural demand, but also enhanced by either government incentives or CO2 reduction. So I think it's a combination of both those. And I think the stock is heading higher. I think Elon was very, very focused on profitability in the second quarter. Earlier in the quarter, he announced cutting of salaries, rent reductions he was asking from landlords, those type of things. And he was doing that so that if he could be profitable this quarter, that would be 4 profitable quarters in a row. And with that accumulated profit, you can be eligible to be included in the S&P 500. And if that's the case, not only will Tesla get the prestige of that, but also I think a lot of index funds will be driven to include Tesla in their portfolio, which will increase the demand for the stock potentially going up further.
Yeah, I mean, that's such a key point you make, and it's pretty incredible to hear you say that you do think the stock is going higher. It's trading at more than $1,200 a share right now, and so I guess it is, to a certain extent, a profitability story. And one of the things that I've heard recently is that because of cost cuts, because of COVID and what that's done to auto demand more broadly right now, is that you could potentially see some of the other auto manufacturers pulling back on investments around next-gen mobility and next-gen technologies. Is that something that is actually taking root, or are those priorities?
Well, I think for all the established OEMs, electrification is still a big priority. And I don't think they're going to back off on that.
Okay.
Because they need it not only for a regulatory standpoint, but they need it from a competitive standpoint. I think in things like autonomous vehicles, you're going to see more partnerships, as you've seen with Ford and VW, GM and Honda, where they're pooling their resources. Because in the case of EVs or electrified vehicles, the technology is ready. There's a business model around it. For autonomous vehicles, the technology is not ready yet, and there's not a real business model yet. So I think they'll pool their resources going forward and push that out.
What's your take, Mark, on some of his tweets, though? I mean, clearly his tweets have much reined in from where they were once. But again today, saying who wears short shorts, saying we'll send some to the short seller enrichment commission. As a former CEO yourself, would you have ever put out tweets like that?
Well, I personally wouldn't put out a tweet like that. I subscribe to the theory that be careful of who you step on the way up, because eventually you might be on your way down. But listen, Elon is Elon. I can't crawl inside of his head. But I think, he does what he does, and it's a reflection of his personality. It's a reflection of the brand of Tesla, which is a risk for Tesla, right? You have a key man risk in Elon. And listen, despite the hoopla on the sales, ultimately, their company has to be consistently profitable. And so when it comes to earnings, we ought to look, they have to get more transparent around their margins around their vehicles versus their margins for the company. Because remember, the company margins that he touts includes the tax credits that he sells to other OEMs around the world, and that's not going to go on forever.